Welcome to the Yorkshire Shadow MPC, a partnership between Recognition PR, Clive, Owen LLP and the York Press. I'm Graham Robb and I'll be chairing it. The European Central Bank raised interest rates across the Eurozone by half a percentage point last week, despite fears that higher borrowing costs could set off a domino effect across the banking sector. Interest rates in the US were raised by 0.25 percentage points by the Fed at its policy meeting on the 1st of February, taking rates in the US to a range of between 4.5 and 4.75%. The Silicon Valley Bank collapsed earlier this month, followed over the weekend by Credit Suisse with its buyout from the creditors by UBS. And that's before we even mention last week's budget. Well, all of those things will possibly have an effect on the panel members as they become the Shadow MPC. This is where we envisage we are in the seats of the real Bank of England Monetary Policy Committee and work out what we would do about interest rates if we were given the ability to vote in this week's Monetary Policy Committee meeting. The Shadow MPC for Yorkshire will doing all sorts of things about the economy. Let's get a snapshot first and let's go to Richard Peake of the Helmsley Group, which is in the property sector. Richard, where do you see your sector and the economy at the moment?
Afternoon. If I'm honest with you, if we'd been talking about this last week, I was quite buoyant, and for property in a whole, I still am. Obviously, as you mentioned, the issues of the banking sector coming to play on people's minds now, but we're still finding that houses are selling. People are being refinanced, lenders are lending. There's good tenant demand in certainly the retail sector that we're seeing in York. Admittedly, York is perhaps a little bit of a bubble from certain economic sides of things. Offices is somewhere where we're probably seeing a lack of sort of demand at the moment as people take sort of stock as to what they want to do moving forward. But yeah, I think the dark, gloomy clouds that everyone sort of envisaged on the horizon back in November, December haven't quite materialised from our point of view at the moment. It's just steady the ship and see where we go at the moment. So
I know that Recognition PR's own client base generally is saying a similar thing. There are a few outriders, but mostly the same thing. And it appears to me at this distance that the economy in general has reset to an acceptance of interest rates which are more like an historical norm than an aberration of being low for a long period.
No, I couldn't agree more. I think we have to come to terms with accepting that interest rates are going to be the norm at this level from now on. That obviously has stress tested quite a few people, and it has changed buying attitudes. But as I said, we're slightly more hopeful than we were sort of at the end of last year, I think, in terms of where the market will go in the sort of the medium to long term, certainly.
Okay, I'll push you on the rate of interest you'd like to see in a minute. We'll come back for that. Thank you very much. Then let's move on to Philippa. Philippa Symington, of course, from Clive Owen LLP. What are your client base thinking about the economy at the moment? What do you think?
So from a client base perspective, I think it's, in general, there's optimism. However, I mean, there's always that element of caution. I think the last few years have definitely taught us that, we've got to be cautious with the way we approach things. And I think, ironically, the last few years have also prepared people to cut back on costs and, brave that interest rates hike and inflation and those kind of things. So there's a curve of preparation that's been taking place, let's say, over the last few years. As far as, in overall, as to, the budgets last week and things like that, I think in general, I would say that there's an optimism, and that's how the feeling is. I think there was definitely shock in certain aspects of it. But I think we've got more good than bad at the moment.
Philippa, you are the second person to use the O word. It hasn't appeared on this Shadow MPC for 2 years. And we've had the word optimism used. And I'll be the third person because I'm feeling pretty optimistic. But there again, I can be a bit Pollyanna-like when it comes to the economy and always try to look on the upside. So I'm going to take that, come back to you in a minute and see what you think interest rates should be. Gary Smith from Evelyn, you do personal finance, help people, particularly high earners, to manage and plan their money. If this time last year you were telling them that they had to be in government bonds, you would have ended up being wrong. But how are you telling them about where they should put their money in light of current interest rate policy?
It's certainly interesting, and we remain optimistic or positive about the markets compared to 2022. If 2022 was one of those one-off years where all asset classes invariably fell, there was a couple of outliers, but on the whole, everything came down. We are far more positive about this year in terms of where markets will go, especially equity markets to start with. Bond markets, probably with the 7-year duration or less, seem to be a good investment at the moment. That has been tempered slightly by positive economic news in America, which leads to the Fed Reserve probably having to do one more rate rise this year. And the reason why that is important is, as you've seen over the last 2 weeks, is with the banking sector, is there going to be contagion in a spread? Their banks may fail because if interest rates go up too much, you get bad debts. People can't afford to repay their mortgages. You get defaults, and it impacts upon banks and their ability to sort that. But the good news, it certainly doesn't look like it's 2007 to 2009. Silicon Valley Bank had it was investment decisions, probably it was fair to say. Credit Suisse has been on the downward slide since 2009, so it's not unusual in the banking sector to know that Credit Suisse had their issues. And thankfully, the markets have bounced back a bit this morning. But if you're an investor, the FTSE is down 10% in that 2-week period because of concerns about the bank. In terms of optimism, the Chancellor, he created quite a bit of work for me last week when he scrapped the lifetime allowance and made changes to pension allowances. Even before he'd sat down, I was getting texts from clients and emails. Can we now start making pension contributions and utilising the new allowances? Now, if that's not an indicator that people have money in cash and have an appetite to invest, I don't know what is. So overall, we still think markets will do well in 2023. There is a bit of turbulence, some choppy water, but inflation seems to be coming under control. We hopefully are coming to the end of the interest rate cycle. And with the pressures on banks, hopefully interest rates won't go up too much more.
Okay, can I just pick up on a couple of quick points on this, because I go to you as our resident sort of finance expert on this. The first point I'd make is that everyone's debated this pension rise cap about, is it giving money to the rich? But the other side of it is all this money going into pensions is money that will be invested in economies rather than sat stagnant in bank accounts. So it will be useful for investment as well, won't it?
Absolutely, yes. So money that goes into investments does lead to wider investments, whether it be property development, whether it be into private equity investments to grow businesses. And ultimately, businesses wouldn't feel comfortable making those pension contributions if they didn't have cash available or they didn't think the business was going to continue to grow. It's fundamentally, they get corporation tax relief on the contributions that are made. So you've got to be making profits in order to make those contributions and get those reliefs.
Okay, and then the next question is about interest rates in general. We'll come to your opinion on whether it should go up or down in a moment. But inflation, you talked about it being ameliorated. If American interest rates go up, it will affect the pound dollar. There are things like oil that are priced in dollars. That will put petrol pump prices back up. So if we don't keep playing catch up with the Fed on interest rates, we might import inflation. Our interest rates might be right for our economy, but our economy is also a global economy.
Yeah, that was part of the concern that we had in 2022. The Federal Reserve raised interest rates much quicker than UK, Europe and Japan. And we have been playing catch up because the pound and the euro fell against the dollar. We buy most of our raw materials and commodities in the dollar. And if we don't put our interest rates up, we import inflation. So what happens in America is very important to us in the UK. So if the Fed do pause interest rates in June, then that should alleviate some of the pressure on the Bank of England and the European
interest rates in March.
Yeah, but the expectation was the Federal Reserve would pause interest rates in March, but because of the positive economic data that came out of America, it now looks like there might be one further rate rise, and it might be June before they pause.
I see. Very important clarification. Thank you very much. All right, let's move back. I'll come back to you, Gary. Right. Hello, Kerry. Castle Employment. Let's talk about the real world economy as it affects people. How are you doing when it comes to recruitment? Is anything that Jeremy Hunt said last week going to affect you?
Not immediately, no. I think, the intentions are always right, aren't they? But it's just re-educating and a little bit like what Gary was saying, ensuring that people are fully aware of what investing into the pension actually means for the bigger picture as well as anything else. But yeah, no, from a recruitment point of view, huge skill gaps remain. We're seeing right across the UK 50% more vacancies than we've ever seen before. There's a lot more discussion around demographics and this isn't going away. The average age of an engineer is 54. Something needs to be done longer term when 36% of your workforce is over the age of 50. But I think really from our point of view, we're speaking to clients about automation. So they are thinking longer term now on not necessarily how am I going to get this skill, but how am I going to automate them so that that the roles possibly aren't going to be there. It's going to be automation. So that reflects obviously on what we'll be able to supply, but making sure there's enough design engineers to make the robots that will replace the people is the next question. But yeah, to sum up, I would say businesses absolutely need to be putting their talent development and future workforce strategy at the centre of everything that they're planning in the next 2 to 3 years. And this year, as I say, it's not going to, nothing's changed. We can't see that changing in the foreseeable future.
Do you have the ability to use the O word and be optimistic, or do you feel a little bit more steady away?
Steady away. I mean, our market, obviously people have never needed us as much as they need recruitment agencies right now, but ultimately there isn't anywhere near the amount of people to fill the roles and the vacancies that are required in the next 12 to 24 months, never mind the bigger crisis in 5 years' time. The only other thing to note really, I think, is if businesses aren't being flexible, and I don't mean hybrid, I mean flexible, they're not going to get the talent. We were on a seminar yesterday, Friday, and they're saying that there was 250% more applications to an advert if the word flexible was written in it. So if businesses aren't being genuinely flexible with their workforce, that doesn't mean hybrid, it just means be flexible. You're not going to get the people in any role, in any sector, whether it's manufacturing or services.
Before we speak to Steve, I want to hear what you have to say on wage inflation. What's your general sense? And I'm not asking you a scientific answer, but just give me a broad view. Whether you think today in March, as we record this on March 20th, wage inflation is still a hot driver of the economy.
Absolutely. I think, everybody's demanding more. We've seen more and more strikes, but businesses just can't afford to keep being pressured. They're pressured by the staffing costs, they're pressured by corporation tax, everything. They're just getting pushed from both sides. And, there needs to be some reflection on business owners and on a way that they just can't keep improving and driving up salaries to match inflation. It just can't be done. Okay,
thank you. Let's move to Steve. Now, Steve, you work with obviously NewsQuest, publishers of the York Press, which is our partner in this. What's the appetite like at the moment for advertisers? Because you're right at the front end of the economy. If you're doing okay, then it's coming down the line for everyone else.
I wouldn't say optimistic. I'd say more confidence is coming back. I think resilience. One thing that we've seen is businesses have become really resilient over the last few years. And whilst their costs for everyone, including us, their raw cost materials are going up, their marketing spend isn't coming down because they're continuing to want to be seen, and it's very competitive out there. The one area I'd say is a bit challenging is motors. I think new car sales continue to be challenged for all sorts of reasons, particularly as we're moving into the change to electric vehicles. And the second-hand market is really expensive at the moment. But overall, pretty confident. I think most of our customers are and still investing in marketing.
Excellent. Well, that's good news. That is good news because, as I say, you're right. Do you agree with me? You're at the front end. If you're getting a cold in a few weeks' time we'll get flu.
Well, you feel it on course of all the different categories that we take. So whether we are helping clients to sell properties, buying cars, or recruitment, they all come at different times in the cycle of whether we're feeling confident and optimistic or not. And across most of our sectors, it's steady away would be my view at the moment.
All right, Steve, thank you. I think we've got Paul next. I've said there he is, Paul Robbins, Barterline. Now you make things, Paul, don't you, and sell things. What's it like for you at the moment? And remind us what you make and sell.
Yeah, so we're making decorative sundry products, which are traded. They're basically building products traded through DIY and retail, but also the professional trade sector. So we cover sort of three main go-to-market channels.
Okay, so give us a snapshot. Is it lively at the moment for you?
I wish it was a bit more lively.
Oh, very interesting. Interesting.
Yeah, footfall generally in retail is pretty slow at the moment. It has been pretty slow, particularly in the DIY sector. It's quite close to the consumer's pound. So in 2022, it was quite quickly impacted. And you saw, elements of retailers destocking or being a bit more careful with their expenditures. Whilst it's true to say it's been a little bit better in the opening quarter, I still think that the market is still down on previous years. In fact, it's still more or less trading overall around 2019 levels.
Right.
So it's certainly not recovered yet.
But not dead.
Not dead and certainly not booming. I think the cautious optimism would be my cue, I suppose, with potentially some green shoots, but probably a little bit early to judge.
All right, fine. Sounds like my back garden in March. All right,
yeah,
moving on.
As well.
Hello, right. Bob Gammy's next from College of York, St John University. So, Bob, you're in a completely different sector. Tell us what your observations are about how the economy is at the moment.
Well, it's interesting how it's panning out for us, and that we've never had more students, never had more applications from domestic students and from international students as well. We just had a new batch started there in February of 400 international students. Interestingly, around about where they stay and where they're located, in that York appears to be full for students, and they've had to locate in other cities and other towns around about York. What concerns me is visas, and Suella Braverman with her new visa policy coming forward for our international students, and if that was to put a cap on the number that could come into the country, that could give us some difficulties down the line in terms of growth and in terms of expansion. But in terms of how the university is placed, I think we're very strong at the moment. I think I'm very optimistic around the economy as well, and how that will pan out for us in terms of all the different aspects of university life that comes from, and the multiplier effect that a university brings. So, yeah, I mean, just a different set of concerns for us. Also, if I heard what Gary said about the banking crisis as well. The banking crisis does concern me, and if that goes from where it is now and it increases, it becomes much more a global phenomenon, which it may or may not do, because once a banking crisis starts, it's a heck of a difficult thing to try and stop. That worries me in terms of our international recruitment as well. But letting properties is really difficult for us at the moment, and trying to find space for our students in York is really, really difficult.
Okay, Bob, you've also got the privilege of being the first person I ask about what you think interest rates should be. We heard Gary earlier talking about catching up and the Fed, and if we were the real MPC, it would be a combination of what we saw the UK economy being. It would be our own domestic target for inflation, and the purpose of the Bank of England putting the rates up or keeping them the same for inflation. But it would also be taking into account other developed countries and their interest rates, particularly America, because we're going to import inflation. So if you're the first person I put on the spot, if you were on the real MPC this week, would you vote to keep them the same, put them up, or even bring them down?
I mean, my gut feel around inflation would be to put them up. But as I said earlier, that the whole banking crisis and where we are moving with that does give me concern. So I would say let's just keep them the same at the moment and steady as it goes.
Okay, let's bring the whole team on again and let's go for... So the question is, pause, keep them as they are, reduce them, or put them up? Richard Peake, Hemsley Group.
I would pause, keep them where they are at the moment. Just steady away and see where we go.
Pause, excellent. Philippa.
Yes, my vote would also be for a pause.
Pause. Gary.
Pause as well, yeah.
All right, okay. We've a lot of people pausing. Kerry.
Pause.
Pause. Steve.
Yeah, same for me. Keep them where they are.
Okay. Paul.
Yeah, too much uncertainty. Just stay as is for now. Let's see how it pans out.
On the other hand, just let me say this to you, see if it changes any of your minds. I haven't given my vote yet. If it went up another quarter point, it would be more than 4% and so on, but at least it would be something you could bring it down from without it going right down to rock bottom again. And you could protect yourself against another American increase. Does that argument cut the mustard with anyone? No. Okay, on that basis, I'm also going to go for a pause. So we've got unanimity on the shadow MPC. Well, I was going to go for a pause anyway, to be honest. But if we've got unanimity on the shadow MPC, that's the first time we've had unanimity on the Yorkshire shadow MPC for some considerable number of months. Let's see if the Bank of England follows the views of our business people in Yorkshire when they meet on Wednesday and Thursday this week. Thank you very much.